Hey guys, what's up, how's it going? My name is Robin. Welcome back once again for another video on the channel. In today's video, I'm going to be sharing with you guys one Canadian stock that I hold inside my portfolio that I think is worth buying today. And as we approach the end of the year, I'm just going to say a big thank you to everybody who supports the channel. You know, I started this YouTube channel way back in the day in January 2020, earlier this year, and the channel has been absolutely growing like crazy over the past little while. So I just want to say a big thank you to everybody who watches my video. You know, all you guys who've been commenting, all you guys have been hitting that like button and subscribing to the channel. I really do appreciate all the support you guys have been giving me. It's been absolutely crazy, and I can't wait to see what's in store for the channel going into 2021. So if you guys know me, one of my big goals as an investor is to grow my dividend income. And I've been doing a dividend investing case study, and going into the new year, I wanted to do something really cool, which is basically where I kind of build a dividend portfolio from scratch. And I wanted to kind of, basically experience life from a very frugal perspective and eventually get to the point where my dividends could pay for everything that I have in life. Now, I started this portfolio earlier this year, but we've been slowly growing it, and I've been tracking it along the way, and I've been showing you guys how I've been growing it. So when I pick my stocks, I'm really looking for dividend-based stocks that have a lot of potential to grow in the future, and that's exactly what I'm going to be recommending for you guys today. So like usual, if you guys like this video, please do me a big solid favor and smash that like button. Remember to subscribe if you guys want more Canadian-based investing content. Let's jump into the video and let's see what stock that I recommend you guys buy for today. So the stock I'm going to recommend for you guys today is none other than a Canadian solid, and that is Manulife Corporation. So one of the goals on this channel that I wanted to do is I want to start showcasing you guys why I'm buying particular stocks inside my portfolio. So over the next little couple weeks or so, I'm probably going to pick one day each week where I kind of pick a stock inside my portfolio and to give you guys more information on why I'm buying it and why I think the stock is a good buy. So today we're going to be talking about Manulife, and towards the end of the video, I'll share with you guys how Manulife has been performing in my portfolio. So Manulife is a pretty popular financial corporation in Canada, but I'll give you guys a quick little rundown for those of you guys who are brand new to the stock. So Manulife Financial Corporation is a Canadian multinational insurance company and financial services provider headquartered out of Toronto, Ontario. The company primarily operates in Canada, but they do have some expansions in Asia and in the US as well. Alright guys, so for starters, Manulife trades under the ticker MFC on the TSX, and at the current given date of December 12th, Manulife is currently trading for $22.81 Canadian. If we look at some basic information here on Wealthsimple Trade, we can see that in the past week, Manulife is currently down 1.34%. In the past month, they are up 10%, getting pretty good gains in the past month, which is absolutely crazy. And over the past 3 months, Manulife is up 19.67%, which is absolutely crazy. And if we go year to date, they're still actually down 10%. So I still think that Manulife has a lot of potential to grow, even though in the past 3 months, they've been up almost 20%. They're still down a negative 10% over the year. So I still think this is a very undervalued stock to buy, and for it to be like one of Canadians' largest insurance-based companies, I think this is a steal of a deal. And I wasn't lying when I said Manulife was one of Canada's biggest insurance-based companies. If you go on Yahoo Finance, we can see that they actually have a market cap of $44 billion, which is really, really crazy, and goes to show you that they are indeed a really solid long-term based company. Now, what's interesting enough is that Manulife it's actually estimated that every 1 in 3 Canadians are using Manulife as an insurance provider. And actually, the funny thing about that is I actually use Manulife for my insurance as well. Now, when it comes to a company growing, one of the most important things I think that companies really need to be doing is they need to be showing us that they're growing in terms of revenue and gross profit. So when I see companies are doing things such as going international and expanding beyond Canada, I think this is a really good sign, because that's really how companies take their earnings to the next level. And one thing I really like about Manulife is they're actually expanding a lot of their services to like the Asia markets and internationally. And if we look once again on Yahoo Finance, we can see that Manulife is doing a pretty good job of growing. And one of the most important things is when a company is constantly growing their earnings. If a company can grow their earnings and grow their profits, then that means that over time, they're almost guaranteed to get some stock appreciation. So we can see here that since 2016 here, on a yearly basis, Manulife has slowly been growing their revenue, and their earnings have been doing pretty decently as well. Although they're not the fastest growing company, the fact that they are growing is always a nice thing to see. If we go to the quarterly earnings, we can see that 2020, just like most companies, were pretty rough, but actually their revenue has been doing quite well. And Q3 for Manulife has actually been really good. You guys can see that their earnings, specifically their earnings, have done really well in Q3, and Q4 is looking to be the same. So I really like what I'm seeing from Manulife, and I think if they can do well in this environment, they're definitely posed to do well going into the future. And a lot of Manulife's earnings in Canada have been down this year, but the reason why they've kind of been able to grow their earnings amongst the pandemic is the fact that they're expanding into some of the Asian companies, and as those companies kind of opened up a little bit quicker than some of the than Canada did throughout the year, you can kind of see that this really helped them grow their bottom line. So I think going into the future, as we keep recovering and things keep opening up and people, businesses keep kind of growing kind of thing, I think Manulife is definitely going to do well. And if Manulife can do well during a pandemic and continue to grow, there's no reason to really expect why they shouldn't grow and keep doing well once things recover going into 2021. And one thing I also want to mention that I really like about Manulife is that their PE ratio is actually sitting at 8.62, which highly suggests that the stock is undervalued. And once again, if you look at the year-to-date earnings and seeing that Manulife is down 10%, like I mentioned earlier, I just think that this is a really hugely undervalued stock. So as we've seen earlier this year, when the stock market pulled up, Manulife got pulled up with the stock market. So I still think as the stock market continues to grow going into next year, I think it'll pull Manulife up with it, especially since I do believe this is such an undervalued stock. Now, one thing I've yet to talk about, which is really important for me as a dividend investor, is the fact that Manulife actually is a really good dividend-based company. They have a really nice good dividend, and they've been growing their dividend for years to come. So let's spend a little bit of time talking about their dividend, because their dividends, if you're building a dividend-based portfolio, you kind of want a company that has a good history of dividend growth, and if you can, you also want to get a company that can get good stock appreciation. And I think Manulife fits those two things. So let's spend some time talking about Manulife from a dividend investor's perspective. Alright, so one really nice thing I like to see right now is the fact that with the price of Manulife currency at $22, almost $23 a share, it's got a nice dividend yield. It's got a dividend yield of pretty much 5% here, sitting at 4.91% at the time of doing this video. So you can get a really nice good dividend yield, as well as a nice undervalued stock if you buy Manulife right now. And if we go to MarketBeat, we can see some basic dividend information here. So Manulife's annual dividend, that 5% dividend yield, ends up being about $1.09 Canadian per share, and the payout ratios are actually pretty good for Manulife. So we can see that they have a payout ratio, a pretty conservative payout ratio of 41% in the past month. And based on this year's estimates towards the end of the year, we should be sitting at 30 to 40%, which is a really conservative dividend yield, which basically says, with this current payout ratio, basically says that they have tons of room to grow that dividend in the future. So even if we buy right now, we don't have to worry about that dividend being cut, and we don't have to worry about that dividend not increasing in the future. They have tons of free cash to put into their dividend. And if we look at this cool little graph I managed to pull up here from simplewallstreet.com, we can see that Manulife's dividend has actually been increasing quite a bit since 2010. And when you're investing in dividend-based companies, you want companies that grow their dividends. So we can see here that Manulife over the past 5 years, about 5 years or so, have been steadily increasing their dividend on a pretty consistent basis here. So this looks pretty solid, and I like what I'm seeing here and how much Manulife has increased their dividend. Keep in mind, these are just estimates here going towards the end, but we can see in the past 5 years here that this is steady dividend increases. So once again, really nice to see, and with their conservative payout ratio, I would imagine they'd be increasing their dividend going into the future. And of course, earlier in the video, I told you guys I would share with you how Manulife has done for me since I started investing with Manulife earlier this year. So inside my Wealthsimple Trade account, I currently have 24 shares of Manulife, as you guys can see here, which is a total value of $546 Canadian, and I am up 14.13%, which is $67 in Manulife inside my portfolio all time. So Manulife's done pretty good for me, and I'm going to keep investing in Manulife because I still think they're undervalued, and I still think there's lots of earnings to come in the future. If you guys want to support the channel, remember you guys can sign up for Wealthsimple. And if you guys deposit more than $100, you'll get $10 for free, and I'll get $25. So if you guys want to support the channel, I'll leave my affiliate link in the description of this video. And if you guys want to sign up and set up a Wealthsimple account, be sure to take advantage of that offer. Alright guys, that's it for this video. So I hope you guys enjoyed it. So let me know what you guys think in the comments. If you guys enjoyed this video, once again, be sure to subscribe to the channel if you guys want to see more videos. If you guys want to watch more content from me, I'll link to some of my videos that I've done. I'll link to my stocks and buying list where I kind of give a portfolio update. So check those videos out because I show you guys the stocks and buying. I give you guys my portfolio update, and I show you guys my goals and my journey as I'm building my Canadian-based dividend investing portfolio. So check those videos out. I'll put an end screen where you guys can click them. And other than that, guys, that's it for today's video. So hope you guys have yourself a good day and take care.